Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. So finally the day came and APE shares were distributed to the shareholders, or partially perhaps, because for reasons yet unexplained, many AMC shareholders did not receive their APE shares today. I saw many people across social media complaining about this, and it appears that victims of this egregious criminal act range in all brokers alike, from Fidelity to TD Ameritrade and everything in between. I did see investors in foreign countries tend to complain the most about the lack of APE shares being received, but that could just be me. Regardless, this greatly affected the way AMC and APE performed today, but it sure wasn't the only thing. The SEC, one of the most criminal agencies in the United States, which is made up of ex-hedge fund managers and bankers, was completely complicit in the price manipulation that we saw in APE today. The stock was halted over 11 times after markets opened, going to show just how excessive this agency interferes in the normal process of buying and selling a stock. HKD ran over 20,000% a couple weeks back and it was not halted once, yet APE didn't come even remotely close to this, and the SEC was halting the trading non-stop in the morning hours. Talk about the most blatant criminal act, it does not get any more obvious than this. As a result of this, alongside the very poor market conditions we saw in general, APE, AMC and GameStop all ended the day bearishly. Not a lot of news came directly from any of these companies today, but we do have to talk about GameStop's NFT marketplace, as further developments show that the company is having a very serious difficult time growing a consistent base and making good revenue. The thing about crypto is that you can easily trace the transactions and measure the performance of the overall marketplace. Now, let us put the big caveat that the marketplace is still new, in a beta phase, and crypto is undergoing its biggest bear market in history. All of these factors weigh heavy on the ability for the marketplace to come out on top and show significant progress, but it is also important to be realistic and look at the facts as they are at the moment. The cold hard truth is that right now, it's looking like this NFT marketplace is not generating enough revenue to be profitable, and if GameStop is unable to change this trajectory once the marketplace fully launches, it will find itself in serious trouble money-wise. Transaction volume has decreased significantly to barely more than $1 million in the past week and less than $5 million per month. Again, once the marketplace is more fully realized and they add more features and becomes more popular, we could see transaction volume rise, but that is just one scenario that could or could not result the way we want it to. The issue becomes a bit more serious when you realize how much GameStop would need the profits to start making a difference for the company overall. This NFT venture is eating into the company's losses and cash burn, which could result in the company losing a lot of money in upcoming earning reports. I know it goes without saying, I am here till the end. I am a huge GME enthusiast and strongly believe in MOIS. This does not change anything regarding MOIS, but it might affect the pace at which people come into the play, as many still see it as an unattractive investment and risky venture. These are just the facts surrounding us. The good thing is that the more the price share falls, the quicker we load up and DRS the shares, taking us further in proving that the float is owned fully by retail. Related to the meme stock fiasco last year, the notoriously criminal and screwed Credit Suisse has been exposed by Bloomberg in a recent article that shows much of the reckoning they are now living in a day-to-day. There is a real possibility that Credit Suisse's investment bank might cease to exist as a separate division at some stage, with remnant parts needed for asset and wealth management. Believe it or not, they once were ranked as a top 5 global investment bank, along the elites like Goldman and JP Morgan. But that was just a quick phase, as their backing of Archegos Capital and Greensill spectacularly ended any ambitions the bank had to really assert itself as a giant in the sector. The company is complete disarray and in much need of a reorganization in order to start again. There are brutal cutbacks awaiting it and nothing about them seems positive at the moment. Let's talk about housing for a minute. Home sellers across the nation are quickly slashing and discounting prices as the real estate market rapidly cools. The unrealistic expectations of a continuous never-ending bull market have now come to an end as the housing market has reached an abrupt and sudden lack of demand. It's almost like when the Fed isn't printing money non-stop, things suddenly stop running up and begin to return to normalcy. The Fed's effort to fight inflation through rate hikes has sent mortgage rates above 5%. This is honestly great to see, but I think it is only the first phase of a longer process in which the housing market really begins to dip, but I will have to make a video on this issue separately. Let's now talk about today. Dark pool trades reported for AMC accounted for 52% of the total volume today, while dark pool trades for GameStop account for 44% of the total volume today. Like I mentioned in yesterday's video, Wall Street is reeling back as fears over what might happen at the Jackson Hole retreat later at the end of this week. We saw the S&P 500, NASDAQ and the Dow Jones all reel back significantly, seeing their worst performance rout in 2 months. The Fed might begin to price in rate hikes for next year, which could have a disastrous effect on the performance on the stock market. Historically speaking, there is much reason to believe that the road ahead is going to get extra bumpy in upcoming months. Let me explain. If you trace back to the last 6 bear markets since 1970, 4 of them had an average of 6 or 7 short-lived uptrends. This is something we talked about earlier last week. Bear markets are typically filled with bull rallies that are undone by huge dips in between until the economy begins making real progress. This is something that we need to contend with, because hedge funds have already been reported as taking positions for higher rates in key corners of the derivative market. They are taking short positions across futures and betting against the market. I don't think I need to be the one to tell you guys that these people not only bet against the market but manipulate prices so that they meet their own self-interests. So when a big collective group of the institutions take short bets, make sure to bet with them and not against them unless you want to karma farm on Wall Street bets for loss posts. The bond market also saw a significant retracement today. So, you guys remember how a couple weeks ago the government was signing praises about whatever progress they made regarding inflation, which was reflected in the CPI data. The CPI data for July came in cooler than it did on June, and somehow that was a sign of good things to come and continue. Well, bulls might want to sit back and relax a bit because developments across Europe and the energy sector show the possibility that we could potentially see further inflation growth due to price surges. That's right, European gas prices surged 20% after Moscow moved to shut down a major pipeline. This is now creating a lot of uncertainty and fear within investors. Saudi Arabian Energy Minister Price said that the extreme volatility and lack of liquidity means that the futures market is disconnected from fundamentals, something I have been screaming for over a year now. He then went on to signal that OPEC may be forced to cut production. The prince said that witnessing the recent harmful volatility disturb the basic functions of the market and undermine the stability of oil markets will only strengthen their resolve to cut production down as a direct measure to force stability into prices. Crude oil future benchmarks have fallen more than 20% since early June, and open interest and trading volume remain well below historical levels. The world keeps getting grimmer and grimmer, but you will never ever hear the government admit to it. It's always a pipe dream, as that is what they have to sell to you. Things are very unstable, more than they have ever been, and now with Russia cutting major pipelines and possibly cutting more in the future, we find ourselves in a very serious predicament. If they cut any more, you can bet inflation on the next reports are going to be absolutely historical and blow through the roof. The situation in Ukraine has not improved at all. In fact, it has worsened significantly, and that may lead the Russian government to make more desperate moves. There is a reason why every smart and proven investor along with the biggest institutions are all taking short positions on the market while the media keeps telling you have the wrong definition of what a recession is. They plan on you holding the bags so that they can come and grab the real discounts once everything comes crashing down. I remain solvent and assured of the MOAS theory. These are dark times. The companies are both trying to survive just like everyone else. Investor resilience continues to be strong, and I expect as time goes by, GameStop and AMC are going to be outperforming the overall market even more than they currently are. Lastly, just want to remind you guys to be kind and helpful to each other. One of the things I have been noticing happening is the growth of different echo chambers across different groups in the meme stock communities. If that wasn't bad enough, I am seeing rising hostility between investors. Remember that in the end, nobody on Twitter or YouTuber is to blame for what is going on. We are all in this journey blindfolded as to where we go on the daily, and at best all we can do is guess. There is so much obscurity in the process of all things in the markets, and we need to advocate for more transparency, but in the meanwhile, remember that it is another fellow human being across the screen. Remember that people are frustrated with the process, they are angry with the constant state of manipulation taking place, and that no matter how much yelling you do, there is nothing that stranger can do to change things. I buy the stock and I hold it, it is as simple as that. No need to predict what will happen, no need to gamble on out of the money options. I keep it plain and simple, and I highly encourage others to return to the basics as well. Those yielded the best vibes and the best sentiment overall. Regardless of what you do with your own money, know that I am grateful to have you guys here, that I love each and every single one of you, and that we are not leaving until we get paid or we die. Sorry for the timing of this video, I got caught up doing other things. Tomorrow I will make another one touching more on the situation going on in China. Thank you all for making it to the end. Come over to my Discord and check it out. Other than that, I hope to see you tomorrow. Enjoy the rest of your day and to the moon.